Hello, ladies and gentlemen. My name is Greg Michaelowski. I'm with FXDD, and this is the Forex commentary for FX Street. In this morning's or today's report, I'm going to take a look at the dollar sell-off here today, and it's where it has sold off to, especially against some of the major currency pairs. We are testing some key levels for things like the euro dollar, the sterling versus US dollar, the dollar versus yen, and the dollar versus Swiss. So we're going to go through those different currency pairs one at a time. Let's start off by taking a look at the dollar versus yen, and here I have the daily chart up, and really you could see if I were to squeeze this in here and take a look at this pair from a long-term time period, the dollar yen over this period has been in a in a range with the high 94.95, the low 87. 11 really really 88.12. Most of the activity in this period between 88.12 and 94.95. You can probably even narrow that up to about 89 and 93.7 for that for the dollar versus yen. But what I want to focus on here is this where we currently are at. The market is trading around the 87.11 area, and what does that correspond with? If you go back all the way to December 2008, these lows came in at 13 and 18 on successive days here. I'll zoom in here a little bit to show you more closely. 13 and 18, and then on this day right here in January of 2009, the market low came in at 87.11. Now, if I move forward to this year and zoom in on this period right here during actually it's November of 2009, the market came down very sharply on this day, November 25th. Where did we come down to? 87.21. The market found a little bit of support, but the next day we were able to break through that level, and on the subsequent day after that, or two days after that, the market had highs of 87.01 and 87.03 respectively. So it was sellers. We found some sellers against the 87.11 area. The market moved down to a low in pretty hectic trading down to the 84.80 level here on November 27th. On this day right here, the market was able to move back above that 87.11 area, and that moved the market up sharply on the corrective move to the downside. The market came down to 87.35, found some early buyers against that 11 level, and then from that point on, the market has been moving to the upside here. Now, today we did come down, and we are testing that 87.11 area. In fact, we're currently trading at 87.04 below that level. This area is being tested rather hard. The market moved down to a low of 86.98. The market is should find some support against this level. If it doesn't find the support, then we're going to be looking to heading down toward these lows, perhaps 86.55-ish type area, which was this low period right before the market started its move back to the upside here. Dollar yen, key level for the dollar versus yen. Let's take a look at the euro versus US dollar, and the euro obviously has been under tremendous pressure here as a result of all the situation within the Eurozone region. This has taken the market price down from a high here in November 2009, about 151.44, all the way down to a low at 118.76. This is a pretty good move to the downside. Now, if we just take a look at this little slice of that move, which takes a move down from April of 2010 to the low, we haven't even gotten up to 38.2% retracement at 125.69. This correction is like a dead cat bounce in the world of foreign exchange, especially looking at where we have come from and just looking at this little slice right here. So right now the bias remains to the downside, but there are some things in this chart that suggest, well, maybe we're going to move higher. One is the 124.51 level. That was a high here that we saw on May 28th. Currently, the price is trading right at that level right now. It reached a high today of 124.73. If the market can get above 124.51, this fit 38.2% retracement is in sight. 125.69. I would not put it out of reach. It certainly is reachable, as is this 126.71 level. This is the high that we saw on May 21st. It wasn't just 2 months ago where the euro dollar was trading on May 3rd as high as 133.61. So I don't necessarily expect that may happen, but the market is poised for a correction. We also moved above this trend line here that has been containing. I'm going to zoom in here a little bit, containing the tops here for the euro versus US dollar. Yesterday it came up, tested that level. Today we broke through that level, so that's another bullish sign. So the euro is looking more bullish as well. And if we are able to gain more momentum back above that 124.51 level here today, we could see another move to the upside here in that currency pair. Now let's go to the sterling versus US dollar, and this pair off the daily chart here has shown a little bit more bounce. In particular, what we've seen is that the market move above the 100-day moving average. If I go back to that daily chart in the euro, look how far away we are from the 100-day moving average. That's the blue line in chart, 130.14. Lots of room in between the current price and that level. But if we go to the sterling versus US dollar, we moved above that level here again today. That 100-day moving average comes in at 150.19. The current price 151.17. So that is bullish for the sterling versus US dollar. 152.38 is a 38.2% retracement of this move down from the November 2009 high to the low that we saw here today, 152.32. That's going to be a target level for that currency pair. Off the hourly chart, you can see here that the market did reach a high earlier this week at 151.27, and we are just below that level. And although after breaking above it earlier today, we also have this trend line here, which although we broke it at the beginning of this week, we weren't able to stay above that level, move back down. We are testing that trend line as well. It comes in at 151.30. So key level on the top side for the sterling versus US dollar is 151.30. Get through that level, and we could head up toward this 152.38 level. That would be the target level on the top side. Finally, I want to take a look at the dollar versus Swiss, and we are at key level, or we have tested key support here for that currency pair. The 200-day moving average comes in at the 106.16 level, 61.8% retracement of this move up from the November low to the June high. This is June 1 high, came in at 106.09. The low for the day came in at 105.98. The market is currently trading at 106.39. So we are seeing support buyers, or buyers against the support. Let's put this in perspective. It went from November to May, or to June 1st, to move from this low to this high. 61.8% of that move was erased in a month's time here in the dollar versus Swiss. This is going to be a key support level. Traders will likely buy against this level. If the market breaks through it again, we could head on down to this 105.03 level for that dollar versus Swiss. Obviously, money is flowing in the Swiss currency pair as a result of the flight to quality on the weaker economic data. So there you go, a look at some of the major currency pairs and how that we are testing some key support level, or key levels for the dollar, key support levels for the dollar, it could be that as we head into the unemployment number tomorrow, we're going to be right on these levels, and tomorrow's number is going to increase in importance for the value of the dollar. We'll see which way it goes, but right now the risks are that either the market's going to break further to the downside, or we're going to see a little rebound here this afternoon trading. This is Greg Michaelowski with a look at the U.S. dollar versus some of the major currency pairs.